Hi everyone, and welcome to today's update. So before starting the update, as usual, we'll go through the trade disclaimer. So I hope everybody understands this is for educational purposes only. It's just my opinion. I don't provide any financial advice. So this is just me going over what I believe, BTC may potentially do. Again, this is just my opinion of it. Okay, so let's begin. So first of all, let's recap with what we kind of left off with last time. So one of the things we looked at last time was the original big channel, which was this one over here. And this channel, again, if you look at it, we are still within it nicely. We kind of, still rejected near the top. And then obviously we are in a local channel as well. So if we move over to the 4-hour chart, the local channel we have, it's still in play. This was a channel which was done based on a 12-hour chart. So we can see we've tested it again at the bottom and potentially, try to test it again. It could come down maybe on the daily close tonight, who knows. But looking at it from, this point, you can see that channel's pretty valid. The other thing we also looked at in the previous video was looking at the various different liquidity areas. And what we can see, the highlighted liquidity area, which we mentioned in this particular candle, we've tested that again. And again, we haven't really tested towards the middle fully. So, it is possible we could test it again for the third time and then take off at that sort of point, and this is if price does move higher. So the original plan was something like this, where we had expected the price showing us coming down, testing it, moving up to test the middle of the channel, potentially testing the area of liquidity and moving up. That would still be valid, ideally, if it moves up here, and then if it does reject, to come back down to retest that area. But if it doesn't do that, then there's the change you would see potentially is, instead of price going up, what we will see is price moves up and then comes down maybe to test the lower part of the channel and then retest in this liquidity zone or the middle part of that liquidity zone before actually then testing the lower part of the channel, probably local liquidity areas here, and then potentially trying to then break back up. And if it does do that, then we've got a nicer opportunity to then potentially move up. That's one way, and the other plan is it can still go up. Now, this is all based on looking at the liquidity levels. So what we got, let's hide these two back again. So what we want to do is we want to look for, before predicting this, sort of confluence we have. So before we get to that, let's look at the fib levels from before. And the previous fib levels, this was a trend-based fib, which was basically from the high here to this low, to the wick, and to the high of which we made again, which was the new all-time high. And again, you can see, we are staying above that local 618. And the only reason I say that, if it does test it again, and then bounces off, it could go up. But potentially here, the thing that you want to look at, and what you also want to be aware of, is if it fails to hold the third time, then where could it go? And at that point, you want to then look at not maybe the levels further up, but the levels potentially lower. Because this then effectively becomes a liquidity point. It grabs it, moves up, fails to break the 302 potentially, and then breaks down. And if it does do that, then we want to look at the liquidity levels lower down to see what the bearish plan could be. Yeah, this is not a long-term bearish plan. This is taking each day by day, sort of trade. So what I would then look for here is look at the liquidity zones we marked off in the previous areas. You know, or what previous, not areas, the previous YouTube video, and you could say the previous areas which we looked at on the the BTC chart. So one of the things I'll be looking for again, which is important, is potentially maybe looking at this liquidity zone here around the 54,500 level. Now this is close to the locus 1618. This is if it comes down, you know, that would be a nicer place to potentially go for a long position. Now the thing to also remember if you do look this far down, is that the overall market structure, if you look at it from the daily perspective, let's hide the local channel. So from the overall point of view here, we don't want to lose that if you want to see a continuation for the move up. Okay, and now what we want to do is determine how or where this price could come down to. So let's look at some of the other levels that we highlighted before. So let me just find those fibs. So this is the previous trend-based fib. You can see we haven't still broken above it, and we are still sitting on the 236 level. On the normal fib retracement, this was locally, and again on the local side of it, we're still holding the 618 and currently sitting above the 786. But what I'm now wanting to look at is potentially from the low over here to the high over here, where we could come down and what confluence we might have. So I'm just going to go through all the fib levels from before. Hold on. So I have to create a new one. It's not a problem. So this low to say that high. So, naturally you'd expect a move down from this to come down to potentially a 618. But in this sort of case, we might not get that. There is a possibility of that. And one of the reasons I say that, this is if we hold this level here. And if we do hold it here, then obviously, as previously stated, there is an area of liquidity around here also, which is perfectly lining up with the 0.5. So if we don't hold this, and if we do come down, that's an area that I'll be looking for. The other thing I also want to look at is in terms of the bigger channel. So if it does come down potentially here, there is a chance, we could wick down to the 618 and then pull back up, and that would still be perfect. But that's what I would look at in terms of the price coming down. And the only reason I'm looking at it like this is because, we've attempted to break up to the upside twice, and we failed in this case. And what I mean failed, we're talking in terms of the channel. So if we, do not do that again, I would be looking at these areas here, 618, ideally 0.5, because of the high level of confluence with the liquidity area. And then if it doesn't hold, then the 618 is possible, but then you have the bottom of that channel. And if we do hit this level, there will be a lot of people who turn bearish potentially because of the drop, and there will be a lot of people who may have longed near the top, which could be underwater, and that's still probably underwater. So I'm not predicting a big drop, but in the ideal sense, what you really want is this drop comes down, potentially around this level or even here, and there is that possibility of getting a wick down to come back up again, and that will generate like a swing failure because it's gone out of that channel, and then we'll take the next potential, try to create that move up. Now again, if we do that, then the area for concern is going to be this zone here, the 382 level. And this is if we don't hold. So again, I'm not trying to scare anyone. The idea is to be prepared if price does come down. So, you don't want to just be pure bullish all the time, because it's only natural for price to reach a top area, to retrace and then try again. And in this case, we bounced off the 382, we held it, and we're currently just at the 236. So in ideal scenario, you'd expect it to retrace the 382 again. But if it then does do that and then just move sideways, then it's a potential for it to then come back down further to test that 0.5, and that would be a good area to potentially buy some more. But one of the important things I would stress to everyone is, don't take your trade and just let it be. You need to learn to take profits. You also need to learn to take cash out your profits, because we're at a zone where we're having all-time highs, and the last thing you want to do is get stuck where we had the 2017 all-time highs. You don't want to be stuck in that. We came up, we dropped, we tried to break again and failed. And if we get a similar sort of scenario now, you don't want to be that person who's effectively stuck for a long period of time at holding the top. So it's always important to try to take profits near potential tops, or an area where you define as a potential top. And if price then comes down, patience will be the key to trying to take that long on the lower part of the channel, because longing around the lower part of the channel is going to be a better risk to reward than trying to long the top. And the simple reason is, here you'll have everybody FOMOing in, and here down here at the bottom, in this sort of area, there is a higher chance of more smart money getting in. So you don't want to be the person who longs here, price drops, and you just wait, and then you lose the opportunity from longing down here. And there will be people who dollar cost average and using leverage, and that would be very, very dangerous. So you have to be careful. So my advice would be, long term, I would wait for the price to come down more before trying to long. Now look at it from, say, the indicator point of view. Now on the daily side, what am I looking at? We can see the buys are dropping, the sells are dropping. Titan RG, as this is the whole indicator anyway, has slowly, has broken through the volume bands. And there is that potential that we're going to break this. And one of the reasons why we can potentially break this, because we haven't had a reversal in that buy volume. So if this continues to move down, it will continue to move down. And one of the things I'll be looking for is it could do something where it dips like this and then tries to come back up. And the reason behind it, because the buyers are still higher than the sells. If, for instance, this gap closes and then you get more sell volume, then this dip will be worse. That's another thing to keep in mind. So it's just not it's not that simple, I would say, to just assume to long here. So that is why I would be looking at what the RG is doing in terms of its behavior and where this potentially goes. Because if this carries on having a steeper move, so let's do, say, the ray tool. So if you look at it from a ray tool point of view, like this, and then if we then look at it from, again, this is just trying to predict where it could potentially go. You know, that would not be ideal. And you can say potentially, maybe, if nothing major happens between now and say the 17th, then you know, we could see a more downside move if it does cross over down. On the long term side of things, if you look at it from the weekly point of view, it is doing well, but you know, we have that bearish divergence as well, and you can see that pretty clearly here. And then, you know, you've got the volume dropping off, and then it's getting very, very close to potentially breaking, you know, the VMA bands. So ideally, you know, you want it to bounce off, but if it does not bounce off, you know, you could see another potential drop. And whether this is the big drop or not, you know, I don't want to say I don't want to say anything like that or scare anybody like this. But if we really want it to bounce like this, but if it does not, you know, you're going to see a massive potential bounce to this area, or even if it may break through. And if this does this, you know, this is going to drop hard like this, and then you'll get that cross. And if that does happen, then, you know, you're looking at something sort of like this happening around here, and that will hurt. But then at the same time, you know, it may only be temporarily, but this is, we're talking maybe a month to 2 months time, you know, from an indicator point of view. So, and that's another reason why you really want to be taking profits. So yeah, that's basically it for BTC. I'll do another video later on for Ethereum. So thank you again for tuning in. Sorry for this video's gone a bit too long. And please like the video, subscribe, share it, you know, with your friends, community, family, you know, just to support the channel. And I will go through more, you know, specific topics later on of education, rather than just, you know, showing you what's happening with BTC as well. And to support the channel, also, if you are trading on Bybit, please use our affiliate link. And again, the advantage of using our affiliate link, it will help myself in terms of the channel and the content that I make, and at the same time it will help you out, because any sort of bonuses you'll get as well. And being openly transparent, the bonuses are not which Bybit offers to you know, anybody sharing their affiliate link is literally the same. It's not particularly fixed to any one you know, YouTuber or person on Twitter sharing. It's part of their campaigns. So every little helps, you know. And thank you again for watching, and I will see you in the next video. Take care.